Hello there, traders. Welcome to today's live stream. I'm going live. Well, I'll say going live in a minute. I obviously already am live, but we'll be. I'll just give it a couple of minutes, give everybody opportunity to jump in as per usual. Then we're going to go and cover this CPI data because it was a shocker. It was a big shocker. So we've seen a lot of movement in the market, a lot of dollar weakness. So we'll cover that off as well, and we'll go look at some of the charts that have been of interest this week for us as per usual. I was meant to be joined by a special guest today, but we got our times mixed up. So we're going to be doing next week instead. So apologies for that, but I will bring a special guest next week for you. So we'll be going over a little interview and some analysis as well together, hopefully next week, perhaps Tuesday or Thursday next week. I'll bring on a guest. I'm going to try and bring on some more guests as well in the future, so keep your eyes on that. Just need to do a little bit of reaching out. So yeah, I'll give it a couple of minutes before we really get going, but we're going to be talking about a lot of the US moves in the market. We're going to be talking about gold. We're going to be talking about sort of pound, euro, CAD. We're going to go over those markets as well. So feel free to drop a message in the chat box. Come and say hello. Let me know where in the world you are watching from today. Also, let me know as well what you've been up to this week. Have you had a positive trading week? Have you had a negative trading week? I've had a very break-even week, I must admit. I had a very break-even week this week, and I'll talk through kind of why in a moment. But I'm only in one trade at the moment. Only in one trade. I'm in Euro CAD at the minute. I'm in Euro CAD long, and I'm currently up 52 pips. And I took a Euro pound short yesterday, which I banked about 50 pips on as well. So we'll go take a look at those. But I had a couple of losers at the start of the week, so that's why I'm only in a bit of a break-even week so far. So I'll go talk about that. But yeah, let me know in the chat. Hopefully you can hopefully everything's working okay. No one's said hello yet, which is not unusual. But yeah, just let me know that you can hear me, see me. That would be appreciative. Hello, Harold. Harold from Hampshire. Welcome to the live stream. Are you new? Have you been in one of these live streams before, Harold, or is this new to you? Thanks for letting me know the audio is fine. Appreciate that. BBM client, lovely. Nice. Hey, Tabo. Welcome back to the live stream. Nice, Harold. Hi, CG. Hi, Matt. How are we all doing? How are we doing all well? Yeah, so today's stream obviously is going to be, again, fundamental base. We like to look at our fundamentals here. We like to go through what's kind of going on the bigger picture, and then we'll go dive into some charts. We'll look at some technicals and sort of what we're going to go through. I mean, my sort of philosophy for those that are new is I like to have sort of a reason why we go and trade a chart. We don't just go to a chart and we trade it for the sake of it. We like to go there, understand the reason why we're going to be taking a position. It allows us to have a bias. It allows us to stay and hold positions and things like that. So I'm going to be talking a little bit about that today. We're going to go over the US CPI because that is a very important piece of data that's come out. Good afternoon, Vincent. Hope you're doing well, mate. So, like I said, for those that hadn't joined the stream yet, I was meant to be joined by a special guest today. However, we got our times mixed up a little bit, so he's going to be joining me next week instead. And I'm looking forward to bringing you that one next week. I'm not going to reveal who the special guest is. You know, I want you to come back and We're going to have a chat about markets, chat a little bit about some crypto stuff as well. So yeah, look forward to that next week. So yeah, I'll let you know when that's obviously happening, but it was meant to be today, but it's not happening. So I'll bring it next week. But yeah, let's just dive straight into this. Let's get straight into this. This is a very, very interesting jobs. I was going to say jobs report. This is a very interesting inflation report that's just come out. And what have we seen? So first things first, core CPI month on month. Now, core CPI is basically the consumer price index, but it removes the more volatile surroundings of CPI, which involves sort of food and energy prices. Okay, so it gives us a more of an insight to what's happening to consumers, right? So that has actually fallen to 0.1%. So that was a big number that I was looking for. I was looking for a drop in core CPI. CPI month on month, that has that uses food and energy as well, that came in at minus 0.1%. CPI year on year fell 3%, which basically just means that this time last year it's fallen to 3%, right? So the previous this time last year was 3.3%. So a little bit of a drop here, a little bit of a drop. Is it anywhere near the Federal Reserve's targets? No, they want to see it towards 2%, and I want to see it confidently at 2%, which is a little bit of sort of language that the Federal Reserve chairman used this week, confidently, which basically means they want to see consistent 2%. I mean, will they get it? Probably not, because now the market's going to be looking at pricing in rate cuts. Okay. Now, this is where we can try and understand what a central bank's trying to do. This is what the market's going to try and price in. Okay. The reason why markets move in the first place is because of the difference between the central banks. Okay. The difference between what's going on in their economies, right? In the country's economies. Interest rates is a big one of those tools that a central bank uses to control the likes of inflation and whatnot. Now, obviously, inflation has been the hot topic. It's been the hot topic over the past year, maybe even longer, maybe even the past 2 years, because we had soaring inflation, then we've had inflation cooling off. And what the market is really trying to get towards is when are we going to see significant cuts? When is the market going to cut interest rates, right? When are the Federal Reserve going to cut interest rates? Now, this data here will try and support the fact that the Federal Reserve need to cut. And if the Federal Reserve are going to cut interest rates, then we should see a weaker US dollar. Okay. And that's how we can use that, and we can convert that information into what we can be looking for. It's going to now look for a weaker US dollar. Okay. So this is something that could shape the narrative of the US dollar in the next sort of, month or so, right? We do have obviously a Federal Reserve announcement or Federal Reserve interest rate decision coming up this month. Okay. Will the market now be thinking that they could cut this month? That's what we're going to take a look at as well. So what we could always do is just go on to the CME FedWatch tool, and we can have a little look at where the market is pricing the potential for a rate cut. Right now, if we look at the July meeting, so this is the July meeting, July 24, we can see that there is an 8% chance, 8.8% chance that the Federal Reserve are going to cut interest rates. Right, you might not be able to see that, so let me try and zoom in a little bit. Right, so you can see here 8 point. So you're looking at this little box in the top right hand corner, probabilities of a rate hike or no change or a rate cut. You've got 8.8% on the easing side, 91.2%. So we know that we don't know, but there is a high probability that the Federal Reserve are going to hold interest rates in July. Okay. Now we go to September. Right. And this has now changed quite considerably. Okay. So probability of a rate cut is now at 86.9% in September. Right. So what the market is essentially going to try and do now is going to try and price in that cut, right? So we're going to see stock markets probably rally higher. We're going to see gold probably benefit from this. We're going to see some dollar downside, right? So as traders now, we can try and position ourselves ahead of this data to try and price ourselves into the mix here. We know now that a lot of probably hedge funds and things like that are going to try and price this move in. So they're going to be looking to sell dollars and whatnot. So that's going to be something that we can focus on. So guys, I'm just looking at EuroCAD. I'm very close to my targets now of like 60, is it 60 pips? What's that target? 65 pips. So I'm just going to take that off the table there. And I will show you that in a moment. So I got some money back on EuroCAD, which was good. Right. Anyway, so yeah, 86.9% chance of a cut. Obviously, if we're going to November now, there is a 93.9% chance of a cut. So the market is now pretty much pricing in 3 rate cuts at the end of the year now. Okay, so we went from potentially not even getting... We started off with 4 cuts, then it went possibly to not even having 2 cuts, only 1 cut, and now the market is trying to price in that we're going to have 3 cuts by the end of the year. So this could be very, very bearish for the US dollar. Okay, obviously there's other factors that are going to come into it. I think if President Trump comes in, then we could see a bullish US dollar, but we'll have to talk about that a little bit closer to the time, right? But the change in rate here is quite significant because previously, if we have a little look down here, you get the target rate, right, which is basically just this here. Okay, the target rate, but it's not in a bar chart, it's in this now. But it gives you sort of a change per day, per week, and per month. So this time last month, right, so we're looking at 50 to say 50, sorry, you're looking at the 500 to 525 basis points, which is just 5% to 5.25%, which is this area here. Look at it a month ago. The market was only pricing in a 46.8% chance last month. Okay. Last week, it was only pricing in a 68.4% chance. Yesterday, on the 10th of July, it was 69.7%. Now look at it, 81.2. So this is something that you can bring into your analysis and understand the data behind what's going on. So the market now really aggressively coming in and saying that, yeah, we think there's going to be a rate cut in September now. Okay. Does that make sense? Hopefully that makes sense. Hopefully that's, if you want to come and check this out yourself as well, I will put the link to this in the chat box. It's absolutely free. The CME Fed Watch tool is very unique. They're the only sort of, it's the only really Fed tool that we have. You don't really get this for other markets. You have to kind of work it out for yourself with other markets, and there's an equation that you can use to do that, but I'm not going to go into too much detail on that today, right? We're just going to go over the Fed Watch tool. But this is why it's coming like that, because of this CPI data, and inflation is the talk of the town at the moment. I still feel like maybe we need to see some pressures in the labour market as well. We are seeing that for the unemployment rate rose to 4.1%, and they don't want to see it get to 5%. Put it that way, because anything above 5% has usually led to a recession. So, what is the movers, the big movers on the day? Gold. Gold has been a really big mover on the day. We kind of touched upon this for the past couple of weeks, pretty much since we saw this consolidation develop on the 28th of June to sort of the 3rd of July. This was an area where we liked the idea of looking for long opportunities on breakouts. We had the breakout and the market has just gone higher. I like the idea of targeting this week because I wanted to be long. So selfishly, I wanted to see price do this. Didn't quite get that in the end. The price just kind of held in and around this zone here in towards that 2350s, and the market continued to trade higher. But the targets for gold right now should be around about this 2420 area. If we go and take a look at sort of a weekly picture of this, gold price is now remaining within this overall trading range. So it'd be interesting to see if there's any kind of sellers up here on gold. Let me know what your thoughts are in the chat. Do you think gold's going to go higher, or do you think it's going to potentially top out at these highs? Now, me personally, I think gold's going to continue to trade higher, and the reason being is because we were looking at the commitment of trader reports last week, which tell us where the commercials and businesses and hedge funds are positioned within the market, and they're not selling aggressively at the moment, which tells me that there's yet to be a top in gold at the minute. So I think that we're probably going to see a breakout of this 24.30 level and see a move higher. I'll be interested to see where silver's gone. I've been talking about longs into $32 for what seems like forever now. And look, we're very, very close to that $32 level. This is the sort of zone I was looking for overall targets on silver, up in this kind of area here. We can see, obviously, there was lots of downside pressure here in the past when the market has sold off quite aggressively. And we're coming back up into that $32 level now, which is nice. You know, we've been talking about this since $22. You know, we've been talking about longs since all the way down here. And that has done very, very well. So if any of you caught that ride, I'd like to know, because that's a 41% gain over the sort of year so far. You know, we kind of had this consolidation here between January and February. We broke out in March, and since then silver market has not looked back. So that's probably one of the calls of the year so far, really, for me, looking at silver longs. And you know, that's done pretty nicely. Tabo's got a question. John, the yen pair are moving crazy. Did the BOJ intervene? Probably not. Although they may have used this as an excuse to intervene. So let's have a little look. We've had a 2% drop right now. I mean, it could be an intervention, because that's very large. That is very large. You know, I was looking at this earlier, and you know, what's quite funny, that's about a 432 pip drop. So that could be an intervention, Tabo. What we could see is that the BOJ have used this as an excuse to get involved in the market and have drove prices to the downside, which is exactly what we wanted to see, right? We wanted to see this move, because essentially we're looking at this key zone down through here around about 157 as a potential area for a little bit of a rebound. So if you're looking at opportunities to trade right now, then dollar yen could be a very interesting one, especially if it can come and reach this kind of 157 handle. It was the point of control through this consolidation here, where we had this very nice sort of triangle pattern that we bought the breakout of. Market rallied higher nicely, and now price is coming back down towards this zone for potential retest. So yeah, I like the idea of looking at this, but I mean, that looks like intervention, doesn't it? The Bank of Japan may have seen this as an opportunity to get involved. And again, the BOJ have basically said they will get involved if there were sharp movements within the markets. And yeah, I said this could be one of the events that did it. Don't get me wrong. I've said that there was a few events coming up that could be the reason for the BOJ to intervene, and we hadn't seen it. But, you know, today was a big event, and that dollar weakness is incredible there. And yen obviously just has some underlying, you know, strength from the back of this, and we've seen a big move. But yeah, that could be intervention. If we look at the previous intervention here, then that looks pretty similar, doesn't it? We've had, what was this drop from here to here? That was 576 pips, and then this one was 612, and at the moment we're down 400 and something pips. So we might see a little bit more of a decline here, which is something I would like to see. I'd like to see price try and breach 157, which could be the area where price sort of makes a little bit of a rebound to the upside. I'll have to have a look. Let me go on to let me see if there's any headlines out there at the moment. Headlines will be very much covering the CPI data. You got to think as well, though, like a lot of people trading dollar yen longs at the moment because of the sort of Bank of Japan not intervening. So yeah, they might have bailed on a lot of their positions, which could have which could have also kind of added to that sort of move there, added to that sort of strength of the downside move here, because if these buyers are going to bail out of this overall trend, then they have to sell, right? They have to sell to get out of those long positions, and that could have just compounded that move, right? So might see a little bit of repositioning. Might see a little bit of repositioning on this now. We've come into the kind of high volumes towards this kind of 157.40. I'd like to see a little bit more downside. If we could get that a little bit more downside, I'd be looking for a potential rebound of dollar yen higher, right? What goes down must come up essentially. Obviously not straight away, but that's something. If you take a look at the dollar index at the moment, we're just touching 104s. Obviously, this was a level where we saw some strong buying coming in the past. We saw a nice reversal there in the past. The market's just testing the waters here now. Are buyers interested here? If we don't get any buyers interested and we consolidate, then we could break even lower. So that's going to be something to also consider. Let's go take a look at euro dollar then. So euro dollar, very, very interesting market at the minute. Very, very tough market to sort of trade. If we go to the monthly chart, we can see that we've got this kind of long-term sort of consolidation building here, which obviously if it does sort of break to the upside, you've got potential for the market to come towards this kind of 117, 1.2 handles, right? I've been very bearish euro US dollar because of the fact that the ECB have been cutting rates, but with the French elections and things like that, the market has pretty much just gone sideways here. We haven't really seen much movement from it. I think if we were to see that sort of change in politics in France, then it would have been something really significant, but that didn't happen in the end. So the risk was mitigated really. So yeah, it looks like euro upside is looking quite likely at the moment. And if we're looking at it from this monthly time frame point of view, you've got all these highs here at the 1.1 that could be tested again going forward. If we go down to the weekly chart, that is basically this area up in here, which we saw a strong rejection from in the past. If anything, prices kind of failed to get back into these lows, which was something I was looking for. I was looking for a retest down towards here, or even the 1.0620s, but we didn't quite make it there. In the end, prices just turned around a little bit. If we're looking at it from sort of trend line breaks as well, starting to get a little bit of a pressure break there. I don't really like trend lines too much because you could draw as many as you want and then you can look at it a bit objectively like that. But yeah, there's definitely some chance to get some more upside in these markets now, I feel, especially if we don't react aggressively off these kind of levels. So looking at euro US dollar now, I think the outlook on the week ahead analysis this week was basically to look for price to come up within this level here, within this zone, to see if there was opportunity to potentially look for a little bit of a downside play from here. But if we're looking at it, do you want to get short this now? From a technical view, you might, because we've extended up higher, so you might try and play the fade to the downside. But I don't like the sort of I don't like the idea of being short here now. If we look at the week so far, where's Monday? This is where we were on Monday. We've gone pretty much sideways, and then we've broken Monday's high now, and the market has just continued to push on. So yeah, for me, I don't really want to be selling it. Would I be buying it though? That's the point. I think if I was going to buy it, I'd want to buy it a little bit lower down. I'd want to try and trade it a little bit lower. So that's what I'd probably say here for euro US dollar is, can we get some kind of move down? Again, looking at a little bit of volume analysis here. Got a nice volumes building up towards this 1.08 handle. So, this sort of zone in here could be a good zone to look for opportunities to the upside now. And this was kind of highlighted to us, right? If you haven't seen the currency strength meter before, I talk about this all the time, pretty much in every video, in every live stream we talk about this. But if we take a quick look at it here, the euro, right, was one of the stronger currencies of the previous week. The US dollar, one of the weakest. So it was telling us to be euro dollar long. You can see here I've got euro bullish there. Cable as well. Don't know how cable's done. Cable's probably done pretty well as well, for a nice move higher. And yeah, big moves in the market right now because of that. But yeah, so we had euro, pound looking pretty good. I wonder if the Australian dollar's done pretty well off of this as well, because Aussie has been on our cards to buy, and it looks like it's done very well. Just have a quick look across the board just to see if there's any kind of downside movement to other Aussie pairs. I mean, CAD yen has fallen through the floor. Dollar CAD had a pretty big move, which is something we talked about as well. Still trying to hang around 136 though, so we're going to take a look at dollar CAD in a second. But yeah, from a currency strength and weakness point of view, we were focusing on pound, euro, longs against US dollar, short CAD as well. So I've been long euro CAD this week a couple of times, long pound CAD, and yeah, been trying to take advantage of those. Really, I did actually get a short on euro pound, and that worked out pretty nicely. But we'll go take a look. But yeah, let me know what you guys have been up to this week as well, what charts you've been trading. But essentially, this was what I was doing all my theory off this week. And, if we go take a look at Euro CAD in here. Okay, this is a 4-hour chart. So this was Monday in here. Market came down. Where did it come down? Well, it kind of tested this sort of lower volume area in here. This kind of edge there. Market just kind of filled it out, and then price traded to the upside. So we had a nice move. This was my target area basically on Euro CAD. But I've had a bit of a tough week on it. I'm not going to lie to you. I've had a very, very tough week on Euro CAD. Although my currency strength meter was telling me to buy it, right? Doesn't mean you can't be caught on the wrong side at the wrong sort of moment, right? So I'll show you my sort of poor performance on Euro CAD. So I'm just going to kind of half the screen there because I don't want to block it all off. Let's kind of half and half it so you can kind of see it side by side. Right, yeah. So this is my super poor performance this week. So I'm going to open myself up to you here a little bit. So this was my long earlier. Okay, you can see the trade tracker there. That was my long up towards those targets. Looked like I took a good target out of this in the end. That move was around 60 pips, 61 pips in the end, which was good. But you can see my sort of poor performance in terms of Monday, Tuesday, even going into Wednesday. So I took a couple of long positions here. I actually accidentally went short first, which, in theory would have been really good. And then I realized my mistake, so I went long instead. So I wondered why I was in stupidly. I was like, why am I losing money here when price is going up? And I didn't realize I took a short position. Really stupid. So I had to take a little bit of a loss there. So I took a 6 pip loss, and then I went long, and then price just completely reversed on me back into that big support zone that I would have liked to have got into in the first place. So I took 32 pips there. I then got long where I really wanted to get long, and capitalize on 8 pips. Just wasn't comfortable with how price action was moving here. What I really wanted to wait for was for price to develop the next day and break into new highs, which we eventually got. So, just because currency strength meter this week was telling me that I should be long doesn't mean that I'm going to get the timing right. And, I had a couple of poor performances here this week, I must admit, a couple of poor trades that I shouldn't really have done. So, yeah, unfortunately for me, that's just what I'm going to have to chalk up to, go back and review this week, go and have a little look at why I did that. and then go from there and just see how we can how I can change what I did. The only thing I probably would have done is just once we had this consolidation day and we broke through the low of that consolidation day, that should have been me done for that original long, and I could have saved myself, what was that, 15 pips? I probably could have saved myself another 15 pips before seeing that sort of larger time frame zone coming into play where I really wanted to get long in the market. So I could have held this long, really held another long in there, and I would have been well up on it, which is my usual style. But held on to that a little bit too long this week. But if we're judging it by sort of the weekly movement and how price moved this week, then because we had that sort of gap down as well, market technically has moved 80 pips to the upside, 65 pips at the moment, but the high there around about 80 pips. So that's a good little move on EuroCAD, and just basically saying that the currency strength meter kind of pulled that off again, which was nice. Just haven't best sort of utilized it. Same with pound CAD, really. I had a loss on pound CAD. Tried to get long basically at 174.65. Price then consolidated, broke to the downside, so I exited that position, and then that happens, So it's just one of those weeks this week. But really speaking, that was 188 pips as well that I've not really capitalized on pound CAD. But again, just kind of showing you that the currency strength meter kind of said these ones were the good ones to go for. I even posted on Twitter earlier that this was and we actually talked about this in the week ahead analysis video. We talked about the fact that on this downside move in here, we had volume being built up. The market, if it ignores it, right, can use it on the other side as support, and that's sort of exactly what happened there. The market found it as support in the end and continued to trade higher. So just not the best performing week for me. Maybe I was distracted because England were playing. I was distracted. So now we're through to the final of the Euros. I should be all right. I'll be back on it next week. Farouk, let's have a little look at what you said there. Oh, sorry. I'm in a carry trade on pound Swiss. Yeah, nice. Quite like the idea of pound Swiss long still. If we take a look at the sort of weekly chart here, market just rebounded from these kind of swing lows, 120, 1.1257s, starting to rally to the upside. Could easily see a move back up into sort of the 116.50s here. So I do quite like this. It looks beautiful in terms of where would you want to get long here? Immediately this stands out to me. This zone in here really stands out. So if the market's going to continue to sort of trend higher, big consolidation where the market may want to try and add in. So let's just bring on a volume profile. Look at all this volume that's being built in and around this zone. So I quite like that. I'm actually going to add an alert there for myself. If we get that little move into 115, market may find support at this point, and then we could look to potentially trade up towards this zone in here. Quite like this consolidation that formed on the way down. Let's just extend that volume profile out. Look at that. Large volumes coming in here. We can tell that was large volumes as well because look at the sell-off that came after that. So that's a really nice area to try and trade towards. So I don't know what your targets are on this, Farouk, but 116.50, maybe a little bit lower, 116.30s, maybe 116.25 if you want to be super safe, would be good targets for this. So I'm gonna leave an alert in there. Thanks for pointing that one out. This is a nice potential move as well. Obviously Swiss franc weaker as well because of the lower interest rate. So you're getting a good carry trade on this lower interest rate against the pound, which looks to be leaving rates unchanged as well. So I like this fundamentally. Macro all pointing to the upside here. We obviously had the Bank of England's chief economist yesterday come out and say that wages are going to be or wages and services are having an impact on inflation right now, and it's kind of giving it a little bit of strength. So yeah, I quite like the idea of being a buyer of the pound from that point of view, because that tells me that the Bank of England might not want to cut rates right now, which everyone kind of expects them to do, but they might not do that now. So that could be pound strength. Swiss obviously want a weaker Swiss franc at the moment, so that could help fuel a little bit of upside for pound Swissy. Open at 113.40. Wow, you've been holding for this a while. It's nice when you get the swaps like that as well, right? Because you've been holding since 113.40, which is sort of here. I'm going to assume you bought it within the end of June at some point. Stop losses, obviously, if you were just down this low, I'm just going to set that out as an example, with targets in and around this area here. Yeah, the carry on that's going to be really nice, because you're going to get the triple carry over on a Wednesday as well, which would be lovely. So yeah, I like this a lot. I like this a lot. But that's a good thing to look at if anybody's looking to if they're swing traders anyway, and they're looking to find markets that involve the carry trade. What you want to be doing is buying the currency that has a larger interest rate than a currency that has a smaller interest rate. And if you're looking at an area to find those, there are a couple of ways that you can find it. If you use Forex Factory, it comes up pretty much at the top of the page. Let's have a look. So if you come on Forex Factory, scroll down, you've got your central bank rates there. And this is why I think people are still going to look to short the yen in the short term, because of the carry. Carry is still going to be really good here. So, you've got your sort of pound yens to the upside potentially, as well. Your Aussie yens, Aussie potentially going to see another rate hike. So that's something to watch. I have started to build out my little fundamental tracker here, which is something that I wanted to work on this week. So yeah, just eyeing up some interest rates, inflation rates, GDP growth, things like that, the unemployment rate, balance of trade, which is the difference between the imports and the exports. If a country is doing well on their imports, usually above zero, showing a little bit of growth there, like Australia are, could be some good moves in those particular markets at the moment. So yeah, just building out the tracker this week. This is something that I wanted to work on. So I've been working on this in the background, trying to develop this out a little bit more, just so we can get some ideas. I'm trying to build a macro strength meter, essentially. So something that looks like this, but with a macro outlook. So it's going to have a similar sort of scoring system. The scoring might not be to 7, obviously, but if I give it a different scoring system, maybe out of 20, 25, maybe, and then we can have a little look at it from a macro performance view as well. So that's what I'm going to be building out in a little while. But yeah, another good performance really this week from the currency strength meter. I don't know if any of you in the chat follow it. I know Vincent has a little look at it every now and again. But if it's something that you do follow, I'd be interested to know how you're getting on with it. Essentially, if you find it useful, let me know. Obviously, I'm always looking to develop it, always looking to kind of bring it to your attention if I feel like there are some good opportunities this week. But I mean, look at pound's performance. That's 175 pips that you could have had in the bag, just from using currency strength and meter and weakness analysis. Any questions so far, guys? I'm going to have a quick flick over to the stock markets, because obviously this information as well should be fairly bullish for stocks. I know that we're again a little bit of a rebound now, as we come in, we've just hit that US Open. I mean, that's a big rebound, isn't it? You had that sort of rally up there, 0.4%, starting to give that back a little bit now, which is interesting. Interesting to see. It looks like the market didn't really want to hold above that previous recorded high, 56.37. Looks like we're getting a bit of a rebound to that now, which could be interesting. You know, is that going to be a little bit of downside from the market? I thought this CPI data is pretty positive. The only downside risk to this, right, is that we're not nowhere near 2%, which is where Fed Reserve Chairman Powell said they want to be at. That's the only sort of downside to this report. Obviously, we're probably not going to see that. Well, probably not going to see that this year, to be honest. So the market might be trying to sort of price in the fact that we're going to get a rate cut. But, you know, how likely are those cuts? How likely are they? If the market gets disappointed, then, you know, we could see a move down towards that sort of 55.92 because they're pricing in cuts in September. Are they going to get it or not? That's going to be the question now. Are they going to get those cuts in the market? But I think that should be fairly positive for stocks. We'll probably see a bit more upside to those. Obviously, gold and silver have done pretty well, starting to get a bit of a rebound into these markets now, which is interesting to see because I wouldn't mind that. Let's have a little look. Yeah, it's going to be some volume down here, so I wouldn't mind price coming back into there. Just get an alert on there. Oil has dropped a little bit. Let's have a little look if there was a consolidation down here. Perhaps there was a little move in here yesterday. It's that little marker on oil as well. I don't mind oil longs, so I don't mind looking for that. So I'll keep an eye on that. Let's have a quick flick back up to these yen pairs. Let's finish it on the yen pairs then. Let's have a quick flick on. Yeah, look at dollar CAD holding 136. Amazing. This is the level on. I feel like we've talked about dollar CAD 136 for forever. And look how it's held this year. You know, if we go look at the entire year so far, this 136 area here has been so crucial to the dollar CAD price. You know, and look at it again, just coming in and rebounded from it. It's remarkable, really. I like the idea of being a seller, basically, because price broke out of this range. Again, we had a really nice retest of that. If we go look at where the volume is being built up in and around this area, market came and retested that. We've had a really nice drop come from that CPI. But 136 continues to get defended. I think if we get this give up, of 136, then, you know, dollar CAD is gonna trade a lot lower. Because it reminds me of what happened over here, right? It was just being defended over and over and over again. Let me just get rid of this session breaks because it hurts my eyes at that sort of length. Let's get rid of this for a second. It just got defended. Every single time we come into 136, got defended on the other side, right? There comes a point where that's going to give up. And one thing that I like to look for in that case is how are the lows reacting? Are we getting aggressive drives away, or are they getting shallower? We've got a similar thing happening here now. Okay, we had a strong push away here, strong push away, a very minor push away. Right, so I like the idea of price breaking 136. The highs are getting a lot lower now, so I feel like buyers may begin to unwind a little bit here. You know, I think if we get maybe a rally up into sort of 136.80, and then we start to see a bit of downside, that could be the final final break there. But I'll be watching this very closely because I've been talking about breaks of 136 for so long now, and it just hasn't been happening. And I like the idea of it happening because of the commitment of trader reports, commercials buying at rates that we haven't seen since the 80s. Makes me think that the CAD is going to get a little bit stronger. Sometimes the commitment of trader reports tell us something that we don't know. Right, guy, looking to go long on dollar yen. Has it decided to change what it's doing then, or where are you looking to go long? I mean, it looks good. It does look good, but I'll be very cautious of a long right now. But then I'm being greedy. I'm looking for 157. If 157, okay, let's say 157.25. If we can get 157.25, I don't mind having a look at dollar yen around that level. I don't know if the spreads are going to be quite wide on yen pairs now, or even trying to get into it might prove a little bit difficult. We did see a positive, actually. So I'm just kind of looking at data again. Sorry. I was a little bit muted then. We did obviously see unemployment claims coming at 220k as well. So this is going to be sort of what's happening in the labour market. People are claiming less unemployment benefits, essentially, in the market this week, which could be a positive for the labour market. I know we had a decent NFP. We had a rise in NFP numbers, a rise in the unemployment rate, though, which it wasn't good. But yeah, the labour market could be the point where it's a little bit sticky. This inflation game is going to be a really interesting. It's like playing chess with the market, right? It's like playing chess. Right, guy, will you trade the breakout of the dollar CAD at 136, or you wait for a retest of 136? Might do a bit of both. What I tend to do is go in at 0.25% risk on a breakout move. If I then get a pullback, I can then add in if I feel like it's still a valid position. If it's not valid, and what I mean by not valid is if something changes, the conditions of the market change, macro changes, things like that, then I'll reconsider adding in at that point. But I'll probably trade the break if we get a break and close below. I'll probably look to trade the break. But yeah, it's going to come down to how significant, because if we look at dollar CAD, everyone's buying at 136, right? Everyone's buying 136. We can see this quite clearly. Really, we've been 135.89s. So I'd want to clear that low as well. So that 135.89, I'd like to see that get cleared. So really speaking, if I just drag that yellow line up, if we saw a close below here, let's say on the daily chart, we saw a close below here. The next day, I'll be happily looking to see if we get a pullback for me to try and get short, anticipating a little bit of a move lower. Then if we get sort of a bigger move there and then a pullback to it, then yeah, I could look for something like that, basically. But let's have a little look at this, because there's lots of volume in this zone. I mean, price could come to 135.75 and rebound. I quite like this level, though. 134.80 or 135 essentially would be where I'd be looking to sort of target that move. And then obviously if it trades a lot lower, you've got sort of the 132 handle, which is a sort of a big level of support as well. So that's what I'd be kind of looking for there. When I'm confused about dollar CAD, to look at commodity between US and Canada. Yeah, so yeah, you could look at sort of oil prices, things like that. Obviously, oil, big big trading between Canada and US. Obviously, Canada, big sort of exporters to the US. If we just go on to I need to try and find that website again. Let me see if I can find it. Countries buying exports. Is it this one? No. Trying to find out. There was this website that you could get which showed you sort of it was like a little heat map. I can't seem to find it at the moment. I'll have to try and find it again. Let me see. I'll type in countries by exports, and I'll put like heat map. What's this one? Yeah, it wasn't this one, but kind of looks similar. Yeah, I haven't got it. I'll have to dig around and try and find that website because it was a really useful website and I haven't got it at the moment. But yeah, I like the downside here on dollar CAD, I must admit. Watching this 136 level is quite interesting to me. I like the idea of being a buyer of CAD. So, this to me makes a little bit of sense with the commitment to trade reports. So if we do get a break of that 136, I think we could see some downside in this market. So we'll see what happens here. We'll see what happens. Right then, guys, I'm going to leave it there. Next Tuesday, I will have a guest joining me. So make sure you're around for that. It's going to be an interesting one. We're going to do a little bit of an interview as well as some chart breakdowns as well. Obviously, we'll do the usual, going through the currency strength meter, and we'll pick out some markets and some levels to look at going into the next trading week. So thank you, everybody, for joining me today. Really appreciate all your comments, questions, things like that. If you could leave the stream a like, I would really appreciate that. Lets me know that you enjoy the content that you're seeing here. Lets me know that you want to see more of it as well. So thanks for watching, guys. Appreciate you all for coming. Yeah, I'll catch you next week. Cheers, guys.